Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. We'll also take a look at those Fed minutes as well as the latest reading on inflation. Ryan, it's great to see you. Welcome back to Trade Talks.
Thanks, Jill. Good to be here.
All right, you got it. And let's take a look at your first chart here with an overview on activity with the Nasdaq-100.
Yeah, so QQQ and QQQM were down 84 basis points this week, outperformed the broader S&P 500 index, which was down 1.07%, and slightly outperforming S&P 500 value, which was down 86%. For the week, we've seen this story of continued inflation worries, as well as risks on the geopolitical front, specifically with Russia and Ukraine, both kind of weighing on performance over the past 5 days. Seems to be some conflicting information around a troop withdrawal on the Ukrainian border. NATO says they haven't seen any evidence of a substantial reduction, although the preference for all parties is to handle the situation through diplomacy. But certainly weighed on market sentiment over the week. And today, markets started off lower, but we're seeing stocks pair some of those losses after the release of the Fed minutes about an hour ago.
And if we drill down a bit more into the Nasdaq-100, where are you seeing sector performance derive from?
Yeah, so over the past week, I think that outperformance was derived by its lack of exposure to financials and real estate, along with its underweight exposure to healthcare. On a relative basis, those three sectors were the biggest contributors to its outperformance against the S&P 500. But we got a pretty positive contribution from Airbnb, which a newcomer to the Nasdaq 100 and QQQ, and one of those names that is not held in the S&P 500. It had a great week leading up to its earnings announcement last night. It traded higher by nearly 11% for the week. And then today, up nearly 5% as of about 45 minutes ago, after EPS and revenue that beat analysts' expectations. We've seen this sort of work from home story at first impact Airbnb negatively because people weren't traveling and going and booking hotels. And now it's really been a driver of growth. You saw nearly 80% revenue growth year over year. Earnings per share of 8 cents versus last year on an adjusted basis, a loss of nearly $11 a share. So they've seen pretty explosive growth, from the nights booked, from the average value or the booking value per night. And the company gave Q1 revenue guidance of that beat analyst expectations. So, it certainly seems like a company like Airbnb has hopped aboard the work from home environment, and I think their comments have been largely positive in terms of going forward, looking at travel picking up. And then on the company front, NVIDIA earnings after the bell tonight. Keep an eye on the performance of their data centers. It's been an important metric for their growth.
And if we take a look at inflation, of course, CPI data, that really is what's top of mind. This is really what's driving the Fed decision and why investors and traders are kind of on their toes about what's happening in the market. It's this all important inflation number.
Yeah, it's obviously dragged on longer than the Fed had wanted, right? I mean, with the whole notion of transitory inflation and then dropping that from the language. But you could see it last Thursday, right? We saw January CPI rise 7.5% year over year. That was up from a 7% advance in December. We saw the core jump by 6% year over year. In both of those metrics, it's the highest year over year advance since 1982. And then both indicators were up 0.6% month over month. So, the inflation story is one that's paramount, right? I mean, that's one half of the Fed's dual mandate is to try to control that. And, it leads into the Fed minutes that were released this afternoon at 2:00. I was trying to read some comments from economists out on the street, and really, the overarching theme was that there was no new information in the minutes. Right? Not terribly hawkish. I think a lot of the policy, the potential policy decisions are already priced in. We saw the 2-year down by about 4 basis points as of about 20 minutes ago. but I mean, participants, it was fairly kind of benign language. If inflation doesn't move lower, they're going to need to remove policy accommodation at a faster pace than current, right? So nothing really new from that front. I mean, I think rate hike is widely expected for March. Feels like a foregone conclusion. Really, the debate is whether it's 25 basis points, 50 basis points, or potentially even more. But as Chairman Powell has noted many times, seems like the lack of clarity around the balance sheet unwind in these minutes is because the Fed will continue to be data dependent in its policy decisions.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.